I'm going to give you 3 trading tips which you can implement today, and these tips will massively improve your trading results. So let's get into it right now. Hey there traders, Andrew Mitchem here at the Forex Trading Coach with video and podcast number 490. And I want to give you 3 tips today, which if you implement them today in your trading, they will without doubt improve your trading results. And you will know if you've been trading for any length of time that you see out there that 90 to 95% of all traders lose money. Why is that? Well, it's because most people fail on these points. So let's talk about point number 1. So the first thing you can do to help improve your trading results is to declutter your charts. More than likely, you'll have lines and indicators and dots and arrows and squiggly lines and all over your charts. And the brokers are incredibly good at promoting indicators. And when you go onto most forum sites out there, they are incredibly good at giving you strategies and formulas which involve far too many indicators. And basically, most indicators out there lag time, and they can only draw or plot something on your charts from historical data. And that's the problem. They're all a combination, maybe slightly more reactive or slightly slower, but ultimately what they do is tell you what's already happened and just plot it on your chart in a nice, pretty form with a few lines and dots, etc. The problem is that most people get completely and utterly confused, and they get convinced that what those lines tell you is how you should trade. And that has a number of problems in that everybody seems to think they're going to find the holy grail of combinations of different time settings, etc. And when this line crosses that line and the dot appears up here, that's how you trade and when you should trade. The problem is that, of course, takes away all the skill of trading. It takes away from looking at what's happening in the market. It avoids you looking at the price. And really important that you should look at the price on the right-hand side of the chart, because that's the most important thing. It takes away you looking at currency strength and weakness. It takes away all those skills that you need to be a good trader. So first point would be declutter your charts. Point number 2 would be to get onto the longer time frame charts. Probably you are trading too much and on too short a time frame chart. That's what most people do, and that's where they become they fall into the trap of feeling like they should be trading all the time. And most people, when they start thinking, well, if I go to the 5 or 15 minute time frames, or dare I say the 1 minute time frames, I'm going to find more setups. Therefore, I'm going to make more money because I can just scalp a few pips here and there. There are multiple issues with that. I don't know where to start. So there's the issues of you overtrade, you're spending far too much time at your charts. Every trade that you make, the spread becomes a massive part of your trade, because if you're making, like, let's say 4 or 5 pips and the spread happens to be 2 pips on that trade, then effectively you made 7 pips to make 5 or something like that, or you're making 5, you're really only making 3. You're going to get stopped out of trades all the time. So get away from those shorter time frame charts, because they will do you no favors whatsoever. Get onto the longer time frame charts. Now, really, longer time frame charts would be probably something sort of 2-hour charts, 4, 6, 8, 12, daily, weekly, and even monthly. But get onto those longer time frame charts, because if you look at, let's say, the daily charts, what that means is you can look once a day. Doesn't matter where you live in the world, you can look at your charts once a day. At that same time, which when the daily charts change over, is 5 p.m. Eastern Standard Time, that's New York time. At that same time, we go and look through the 12-hour, the 8-hour, and the 6-hour charts. So we can cover 4 time frame charts at that one time. And then at 5 a.m. New York time, because that's then into a more active trading session with the European session, we look at the 2-hour, the 3, the 4, the 6, and the 12. So we've got 5 time frame charts all at that one time. You can do those 2 changeovers if they suit you for your time zone in under 30 minutes easily once a day. And that's your trading done. So really important that you do that and you look at the close of a candle. If you're looking at the close of a candle on, let's say, a 12-hour chart, you can only look twice a day. If you're looking at that on a 5-minute chart, you could be just stuck there glued to your screen all day and night. And it's not something you're going to do with longevity or enjoyment. So longer time frame charts definitely help, and they're more reliable and offer better reward to risk out of your trades as well. Point number 3, control the risk that you take per trade. So many people don't understand risk. If you look at prop firms, for example, one of the best ways of passing your prop firm challenge is to keep your risk low. You know, it doesn't matter if you can make 20%, but the problem is if you have a drawdown of 20 or 30% to do that, you're failing your prop firm. Why do prop firms do that? Well, they want to preserve their capital. So as a trader, that's your number one priority, is to preserve your capital. So we can talk about strategies and taking only A-grade trades and all that type of thing. But if you don't know how to control your risk and keep your risk low and equal per trade, it just completely disadvantages you, and you're going to get absolutely smashed, and you will lose money, and you will then maybe open another account, or then eventually give up and blame the market, blame everybody else. But the problem is you did not control the risk on each trade. So forget about making pips, forget about the stop loss being an X number of pips or your profit being an X number of pips. Just forget that. Put the stop loss where it needs to be for that particular trade, according to the pair you're trading, the time frame chart, the current market conditions, if there's lots of activity or not. Put that stop loss in the right place, and then adjust your lot size to ensure that your risk is a set and known level that you are comfortable with. For me personally, I never risk more than 0.5% of my account per trade. And then people go, well, Andrew, how on earth can I make money if I'm only risking 0.5%? Easy. You just have to learn how to trade first. Once you do that with low risk, you can then get on to things like prop firms or managing funds for other people or whatever it is that you want to do. Don't worry about your account size today. Don't worry about that sounding like a really low risk, because it is a low risk deliberately. Because if you believe most people out there on internet land and YouTube and everywhere else, they will tell you to risk 3 to 5% per trade. That is utterly mad. Do not do that. 2 or 3 trades, you're 15% down. Think about it this way. If you get to 50% down on your account, in other words, you've gone from, let's say, a $10,000 account to a $5,000 account, you now need to make 100% gain on your account size, which is now $5,000, just to get to break even. So you then start that mentality of gambling, and it just becomes a big mess. Do not do that. So to recap those 3 important points that you can start doing today. Number 1, declutter your charts, look at the price. Number 2, get onto the higher time frame charts, look at the close of a candle. Number 3, learn to control the risk you take per trade and forget about pips. If you'd like more information, if you've not been on one of my free webinars yet, I hold 2 different sorts of webinars, one for new traders, one for the more experienced traders. I highly suggest you get onto one of those. If you'd like help with point number 3 about controlling risk, have a look on my website for a free lot size calculator that works on MT4 and MT5. And I will put a link to that on this video and podcast as well. And if there's anything else that we can help you with here at the Forex Trading Coach, we'd gladly do that. Send me an email, andrew@theforextradingcoach.com, or put a comment if you're watching YouTube on this video, and I'll be pleased to help you with your questions. So once again, this is Andrew Mitchem here at the Forex Trading Coach. Have a great week ahead, and I'll see you this time next week. Bye for now.